Welcome to Illuminati Silver. We tell the truth about silver. Today is Sunday the 28th of February 2021 and we're publishing the 13th episode in our Bitcoin versus gold and silver series. In today's episode we look at gold prices, silver prices and Bitcoin prices all falling and in some cases quite significantly. And we ask the obvious question, have these now reached their zenith and have further to fall? So let's take a look. Now, before we look at falling prices, just a quick summary of our previous 12 episodes, in case you haven't had an opportunity to listen to them. In episode 1, we explained why we launched the series and why people found Bitcoin attractive. In 2, we confirmed the size of the equity market, the tradable gold market and the tradable silver market, and compared this with Bitcoin's capitalisation value. In episode 3, we highlighted a non-exhaustive list of the disadvantages of Bitcoin, similar to other cryptocurrencies. In episode 4, we highlighted that former White House communications director and founder and co-owner of hedge fund Skybridge Capital, Anthony Scaramucci, had launched a brand new Bitcoin fund and the reasons for doing so. In 5, we looked at the intrinsic value of gold and silver compared with the intrinsic value of Bitcoin. In 6, we assessed a number of YouTube and Google influencers who've used Bitcoin's rise both as clickbait and investment opportunity recommendations. In 7, we looked at some of the commentary which followed a dramatic $11,000 fall in the price. And in episode 8, we asked the question, to what extent will the shortage of microchips have on Bitcoin's price moving forward? In 9, with the price hovering around $37,000, we looked at the likelihood of the Reddit Robinhood squeeze agents targeting Bitcoin and whether they could be successful. In 10, with Bitcoin prices recovering somewhat, we looked at Ray Dalio's Bridgewater Associates now beginning to invest in Bitcoin, and analysts predicting a short-term price rise of up to $85,000. In 11, Bitcoin had reached 50k, and that Morgan Stanley's $150 billion Counterpoint Global Investment Unit was exploring a stake in that cryptocurrency, with Deutsche Bank and ARK Investment Management and BNY Mellon also getting involved in various aspects of the custody. And in episode 12, we highlighted that an increase in institutional demand had caused Bitcoin's price to exceed $58,000 with huge pressure from ETF investors as well as others. And also how Bitcoin enhanced the performance of a number of other major cryptocurrencies, as well, quite frankly, as a number of minor ones too. Now, in yesterday's weekly update video, our gold and silver weekly update for the weekend in the 26th of February, we pointed out that gold prices had in fact fallen back some $90 in the past 2 weeks alone, and is down some $333 since its all-time high back from the 6th of August of 2020. Silver on that same date, when gold was at its peak, closed that day at $27.88 and is currently $26.69, just over a dollar lower, having admittedly surpassed, albeit briefly, $30 in the interim. In the same period, however, Bitcoin has risen from $11,830 to its current $46,995, it having surpassed $58,000 in the interim. So one can see a 4 times rise in Bitcoin, but a fall in gold and a very minor fall, for the sake of argument, no change in silver over that same period. Clearly, therefore, the wind has been and may continue to be behind the sales of Bitcoin and other cryptocurrencies, which have also themselves performed outstandingly over that period too. Of course, a number have failed as well, but we're talking about perhaps the more prominent ones. especially as Bitcoin has become more and more expensive. People have been moving to the likes of Ethereum and other coins too. That said, this past week has probably been one of the worst weeks for Bitcoin for over 12 months, seeing its price fall by over $9,000, albeit admittedly from all-time highs. The issue now is, where are the three asset classes going from here? Well, gold, at least by many institutions, is forecast to go lower as real yields in the United States particularly begin to rise, and we're talking about the dollar value here. Silver is expected to take a dip but recover as world economies come out of lockdown and therefore industrial demand rises. And Bitcoin, yes, and Bitcoin. Well, much depends upon whom you ask. Denis Vinokurov, head of research at Bequant, is quoted as saying, quote, "Despite the narrative being sold by crypto maximalists that digital assets are a safe haven asset, the use of Bitcoin suggests it is more of a risk asset. Thus, liquidity events such as those witnessed this week in equity markets will subsequently feed into digital assets, even if fundamentally the two are not related. Cash is king in times of distress, not Bitcoin," unquote. Guy Hirsch, US Managing Director at trading platform eToro, has a differing perspective. Quote, "Right now, one of the most interesting aspects of Bitcoin is that it has no fundamentals to base a valuation model on, but its price movements do correlate with social sentiment. Shifts in social sentiment can be indicators of price movements and inform investors about short-term movements. Long-term, though, we do feel that it is a safe haven in the sense that there is no way to artificially deflate it or otherwise manipulate it, and that is a perfectly good reason for people to invest in it," unquote. So, the debate is on. And remember, we have many institutions believing that Bitcoin could indeed hit $85,000 or more this year, and some pundits, like gold and silver pumpers, predict $1 million Bitcoin anytime soon. Now, gold forecasts, in comparison, are gradually being slashed by major banks and institutions to around $2,000 for this year, when many of them had forecast $2,300 up to $3,000. While silver generally is still seen as an asset with some price possibilities still ahead, ranging from anything from $30 to $50 by the more respectable analysts, and of course $600 to $1,000 by the traditional pumpers. As with all investments and asset classes, nothing goes up in a straight line permanently, and equally there will always be pullbacks, even in a raging bull market. We should also not forget political and legal oversight and influence on non-governmental forms of money or investments. And it's certainly no accident that the Fed announced this past week that it is working as a priority on a digital dollar project for potential early adoption, one suspects. Now, we are still of the opinion that Bitcoin has further to run as more institutions and hedge funds climb on board, and it will gain even more appeal amongst normal everyday investors and speculators, not only because of a social context, but because investment advisors too are advising individual investors to at least expose, if only a small proportion, even if it's 1 or 2 or 3 or 4% of their overall portfolios, towards this particular asset class, or a fund investing in this asset class. As for gold and silver, we personally are sticking by it, though we have to admit we anticipate much less excitement than in the cryptocurrency sphere. After all, as one gets older, too much excitement can in some cases, prove fatal. What are your thoughts? Do you believe the pullback is going to be detrimental now to the cryptocurrency regime and that it will collapse from current levels? Or do you believe other investors who anticipate even further rises? What makes it difficult is that even Elon Musk this past week has expressed some surprise at how quickly Bitcoin has risen, particularly since his investment in the coin has probably earned him something close to $1 billion profit already. Do share your thoughts, we would appreciate it. And also, if you haven't done so, kindly subscribe to our channel. Thank you so much for listening. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.